What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Monday. Hope you had a good start to your week. Getting going on the live stream a little bit late, so we'll see who shows up today. But on Mondays, I do put out the Bitcoin Fundamentals Report. That's a newsletter that covers all sectors of Bitcoin. It's quite comprehensive, and so it takes me a while to write. That's it. I ran into the deadline today, but we are here live streaming. We're going to go through that and discuss. Let me go ahead and share my screen and jump right into it. You guys can subscribe over at bitcoinandmarkets.com to the email list so you'll get all my posts. And you can also support the show over there. I am live streaming on YouTube, Rumble, Twitter, and Telegram. So if you are watching on Twitter, jump over to YouTube at least and subscribe over there. I'm trying to get the channel monetized, so I'd appreciate that if you guys did that. Also, it's easier interaction with live chat and stuff. So check out the YouTube, check out the Rumble, and the Telegram is a community. Like I said, I'm also live streaming there, and I will be checking the live stream thread for comments from those guys, which they have some already. All right. Well, but let's cover these before we get into the fundamentals report. So E asks, what is my opinion on Amir Taki? Had tweets saying Core conspires with BlackRock and Saylor. I don't have any bad opinion of Amir Taki. I think he did good work early on in Bitcoin. He hasn't been around for a while, at least like in the headlines or doing really big things in Bitcoin or anything like that. He still does his stuff, but he's kind of like we were talking before we went live about early adopters and stuff. He is the perfect example of a very early adopter, cypherpunk, that was there at the beginning, and Bitcoin just grows past those people. So, and as Bitcoin's growing, cypherpunks will kind of get this feeling of they're losing something. And so I would say Amir Taki kind of fits. And so when you're losing something, maybe you start thinking conspiracies and stuff. So that's what I would put Amir Taki into. Okay. And then Point and Baron just had their comments too. That are funny. But all right, check out Telegram, guys, if you want to join the community over there. Let's go ahead and get into this. Report number 310. I have been doing this a long time, guys. Never sold a scam. I've done price prediction and forecasting, and I haven't been right all the time, but I've been directionally right most of the time. So I don't like, what's that guy's name? Gareth Solowell or something like that, where he's shorting Bitcoin here. I don't do things like that. So check out the newsletter or the email list and the support if you want to support me monetarily. Here's a quick navigation. You can jump to all the different parts of the newsletter. As you can see, it's quite comprehensive. Okay, snapshot of Bitcoin. Shorts are getting desperate. I wrote about this on Friday on the premium content. We'll take a look at where those shorts are sitting. And this is kind of like a last-ditch effort that they're having, trying to protect themselves up here from getting liquidated. Media sentiment is generally positive. I put this down from very positive because of the central bank stuff, which we will cover here in a minute. Network traffic is low. Mining industry recovery. They're in recovery right now. Hash rate jumped to all-time high, even though revenue, it's kind of improving with the price going up here, but they're still having trouble post-halving. And so we'll look at the mining industry in more detail. Price section at the time of writing, 67,616. That is 1,600 up on the week from issue to issue, Monday to Monday, and that's 2.5%. Market cap 1.33 trillion. Satoshis per dollar 1478. We dropped below 1,500 sats per dollar. Hopefully that's the last time that we see 1,500 sats, but Maybe not. One finny is my denomination. That's 1/10,000th of Bitcoin, right smack dab in the middle of the decimal places. So I think it's pretty convenient for people, and that's $6.77. Mining sector. Previous difficulty adjustment was plus 4.1%. The next one, in less than a day, I think about 20 hours from now, is estimated to be 4.3%. So you can tell the hash rate must be climbing quite rapidly at this point. Mempool just slightly up on the week. Last week it was 112. This week is 119 at the time of writing. And also at the time of writing, fees for the next block, 133. That's quite manageable. 14 sats per virtual byte. And the low priority fee, if you're willing to wait a little while, is $1.14. You can save a little bit, but that's not that big of a difference. Lightning Network capacity down another 0.4%, or 19 Bitcoins coming out of the Lightning Network this week. Channels also down 0.2%, same as last week, same drop percentage as last week. But yeah, Lightning Network is not getting the love right now. Okay, let's move on to our main headlines. But actually, before I do that, let's check comments. See if there's any comments over on YouTube and Rumble yet. No, like I said, this is a different time for me to be live streaming, so hopefully people can join. Okay, SEC approves options trading on spot Bitcoin ETFs. This came out Friday. We covered this on the Friday live stream. This is a massive milestone for Bitcoin. It allows for the first ever regulated options on a fixed supply asset. Bitcoin's fixed supply creates a rare volatility smile, where price surges, melt ups, are as likely or more so than crashes or meltdowns. As Bitcoin rises, implied volatility also rises, creating negative VANA. And I did have a question already on this. Did I mean gamma? Well, it has a negative gamma and a negative VANA. And Jeff Park, who we read through again on Friday, he talks about VANA. So that's why I put this creates a negative VANA. This forces market makers to buy the underlying asset to hedge their positions. Huge thing for Bitcoin. Bitcoin will experience negative VANA gamma squeezes, a condition where sharp price movements have major reinforcing characteristics. This can cause the price of Bitcoin to explode higher, but will also lead to larger drops. However, the attention and adoption this brings to Bitcoin will somewhat mitigate the sell-offs as more demand arises to buy the dips. So there you go. And we did, like I said, go through this whole thing, explanation of this. Basically, as you know, usually in an asset, as price rises, implied volatility drops. And as price dips, implied volatility rises. So Bitcoin is not like that. As price rises, implied volatility also rises, forcing you to go out there and buy even more Bitcoin to hedge your positions. And so that's why this is important, that this is the first ever fixed supply asset that's had these type of options, because it has that volatility smile. Anyway, you can check out the live stream there. Okay, next topic. We're getting into the central bank stuff. The ECB blasts Bitcoin, and you can go right to the paper here. I didn't read 100% of the paper, but read about 75% of it, and I had a few comments here. So this new paper from the European Central Bank took shots at Bitcoin. I'll include a few thoughts here, but want to address it more in a post soon, a full post like my Bitcoin Minute or something. Important to understand that this and the next paper by central bankers are opinion papers, not official positions of the institution. Okay, let's go through some of their points here. So number one, the authors argue Bitcoin hasn't achieved what Satoshi or early Bitcoin adopters aimed for. This is a silly argument that doesn't address what it has accomplished, instead focusing on irrelevant perceived failures. So it doesn't matter what Satoshi and the early Bitcoiners wanted. You need to address what Bitcoin has become. Bitcoin has become a $1.3 trillion asset. It settles $40 billion a day on the network. It is owned by way over 100 million people in the world. 22% of US adults supposedly own Bitcoin. And so, like, it has accomplished a lot in a few short years. I've also seen charts where, Bitcoin adoption is outpacing the internet adoption from just a few decades ago. So it's growing very, very quickly. I mean, what do these people want? Do these people want like 10 years mass adoption? No, it's going to take a lot longer than that. At least probably 50 years to really get to full adoption. Hopefully we can get hopefully it'll become more obvious to everybody, in over the next 10 years here. So stretching out Bitcoin's lifespan to 25 years, um, that seems like a very rapid actually adoption of this technology. Okay, number two, authors claim central intermediation in the current banking system is not quote unquote mediation, and then say Bitcoiners are misunderstanding what mediate means. This is a semantic argument purposely missing the point. Banks can mediate when they want to or are forced to by the government. So, yeah, getting rid of trusted third parties, that's the point. Disintermediation of the trusted third parties. We're not really talking about the term mediate. All right. The authors respond to a Satoshi comment on double spending on a peer-to-peer network by claiming there are cheaper and more efficient ways to prevent double spending. They completely disregard the peer-to-peer network aspect. So, yeah, this part was just crazy to me. They talk about Satoshi saying, "Hey, this is for double spending on a peer-to-peer network," and then they say, "But there's cheaper ways to do it." Completely forgetting or disregarding the peer-to-peer network aspect. There is no way to do peer-to-peer consensus, peer-to-peer network consensus without Bitcoin. I mean, you can do it, I guess, on other networks, but those will eventually fail. Like proof of stake. It's not a coincidence that Ethereum's price has been selling off consistently since they went to proof of stake, since the merge. It's been pretty much down and to the right because it doesn't work. They have points of centralization that Bitcoin doesn't have. So Bitcoin is the only truly decentralized thing out there, and it is the only way to really do decentralized double spend protection is the Bitcoin thing. And they don't know what they're talking about. Of course, there's cheaper ways. PayPal does it, banks do it all the time, but those are centralized. Those aren't peer-to-peer. Okay, number four, the authors claim that there are countless assets on Earth with limited or finite supply and offers these examples. German stamps from the 19th century and any other set of collectibles, pieces of art, and land. None of those rank very high on monetary properties. So none of those are very good monies. Okay. The authors aren't even correct when it comes to land, but we'll discuss that. Collectibles are non-fungible. So one German stamp is going to be different than other German stamps. It might be one of a kind, or it might be that one is used. And so when it was taken off of the letter that it was used on to put into a collection, it has like a stamp or a little tear or something like that. So they're non-fungible. Art is a supply of one, not a very good money. Land can be created. Just look at Dubai, the Netherlands, and Kansai, is that how you say it? Airport in Osaka, Japan. They built a island in the middle of the bay and put an airport on it. So land is not even fixed like he said it is. So they're not even correct on this. All right. Number five, they end the paper with an examination of Bitcoin's adoption effect on wealth distribution, claiming early adopters will benefit at the expense of late adopters. It is full of strange assumptions and doesn't pass the logic test. Wouldn't you want your consumers to have more money? Like Bitcoiners having more money is good for the economy in general because they can spend more. They can afford even higher prices. Say prices go higher because of quote unquote inflation. The Bitcoiners can still afford that, and there can be circulation of money in the economy. You want that. That benefits everyone. How could they voluntarily sell to latecomers if the latecomers weren't benefiting. So why would the latecomers buy Bitcoin if they weren't benefiting from it? In voluntary transactions, both sides benefit. It is a win-win situation. They want to make latecomers somehow um, uh, they want to put them and say that they do not benefit from voluntary exchange. Of course they do. Uh, how could the price even rise to significant levels if demand was not pushing up the price? Oops, I forgot to put not in there. So, yeah, I mean, it's like the statement about this club is no one goes to this restaurant because it's always full, or no one goes to this club because it's too crowded. Okay, how would price even go higher if demand wasn't pushing it higher? You know, all their assumptions don't make sense, and this is basically a Marxist logic. Okay, and I tied this into Kamala introducing the idea of equity being applied to Bitcoin, targeting adoption and stuff of black men specifically. That was a cultural Marxist attack. Now we have authors at the ECB explicitly attacking property rights. The early adopters, they should pay taxes on it. They should not be allowed to have Bitcoin early, et cetera, et cetera. That is Marxist logic. Okay, moving on to the Federal Reserve stuff. But before that, let me see if there are any comments. Still none. Let's go to Telegram and check it out. Regarding the Schaff paper, Ulrich and Schaff, their little toy redistribution model explicitly assumes that Bitcoin has no productive purpose whatsoever. Yes, that is one of their assumptions that don't make any sense that I was talking about. Under this assumption, which they say explicitly seems reasonable, yeah, a world running on Bitcoin does not improve economic affairs, trade, financial flows, transaction costs, economic performance. Visa and MasterCard fees, one bit. Yeah, I mean, you guys know that I'm not in the camp that Bitcoin is going to be adopted at the same time that we have a flourishing of the economy. Okay, it's mainly being adopted because the economy isn't flourishing, because the old system is breaking down, globalization is breaking down, lack of trust, international trust, lack of domestic trust, being so divisive with people, overstepping of bounds by banks and stuff, closing, debanking people and things like that. Um, Also, not trusting your government to not spend money and have run perpetual deficits, which we'll get into in the next paper. So, this whole societal trust is breaking down. The economy is declining, and that's why we're going to adopt Bitcoin, because it instantiates the trust or manifests the trust in the money itself. And so, um, I mean, thinking of their assumptions that there's no productive purpose, that is a productive purpose to manifest the trust needed to transact, but it will not lead to vast human flourishing. Like all of the ideas about Bitcoin citadels and how there's going to be um, high technology in these citadels versus maybe the rest of the people are relatively poor. That's not going to happen. Um, Technology is slowing down, and uh, they're attempting to do a lot of one to manys in Peter Thiel's terminology. There's not a lot of zero to ones. Some people could argue like that AI is a zero to one, but I'm unconvinced on AI at this point. um, I don't think there is going to be an economy enough to support how big AI has to get. If you've seen charts of like the scaling of AI, there's this line that they just can't quite cross over. And there's also a vast need for energy. Yeah, energy I think will get cheaper, but there won't be the profit in it. And so you're going to be running all of this expensive hardware uh, for no profit. No, there's no way you're going to do that. So I'm unconvinced of AI that it's economic in the long run. Um, but what was I saying? That to productive purpose. Uh, I lost my train of thought on that. But yeah, the economy. I kind of agree with them in that Bitcoin is not going to like enrich the economy. Um, it will enable the economy to function in a low trust environment. I hope that makes sense. Okay. But that was a good comment, Joachim. I don't think you agree with me 100% on that either. But okay. Let's go on to the Federal Reserve. They blast Bitcoin. Not to be left out, Amal, and Lutmer have produced a paper from the Federal Reserve. They have produced a paper that says, quote, the government can uniquely implement a permanent primary deficit using nominal debts and continuous Markov strategies for primary deficits and payments to debt holders. But this result fails with the existence of Bitcoin. So Bitcoin puts a stop to all of this perpetual or permanent primary deficits. Their suggested solution is that they should just ban Bitcoin or put it at very high tax rates. So that is their contribution. I don't think this was nearly as professionally written as the one from the ECB, but you guys can check it out right here. I really didn't take this very seriously at all because it's such a silly premise. Like, hey, how can we run permanent deficits? Like, that's not what a mainstream Fed economist is going to be thinking, or even wanting to put in writing. I should say that. So that's what I would have to say there. Joachim. Yeah, that's wild. Yeah, no, I definitely see Bitcoin making the world more productive. Okay. Yeah, I think Bitcoin will make pricing better, and that will ultimately be more productive, but it can't make people have babies, and demographic decline is real. Deglobalization is real. And so it's not going Bitcoin is not going to make us trust our neighbors. Like if we could trust our neighbors and we had like I'm talking like country neighbors, not the neighbors on your block. But if we could trust the world economy, then there would be no reason to get rid of the dollar the way it is now. Because see, the whole crux of this is that credit requires at least the credit that system that we have built over the last 75 years requires like a Pax Americana. And without that Pax Americana, the ability to carry the credit diminishes. And so you have a crash in credit, which is very, very bad for economic activity. It would put us into a depression, most likely. We've probably been in a depression since the great financial crisis. We just don't call it that. And the numbers, the way, what gets measured gets managed. And they've just measured things a certain way with GDP and all this stuff that they've been able to manage the numbers to make it look like we're growing. But maybe in 100 years, 200 years from now, they'll look back and be like, holy crap, they were in a depression since the great financial crisis. And yeah. And now on top of that, you have the demographic problem. So, no, Bitcoin is going to be adopted in a world where credit is failing. So it might help the individual, and it might help at the margin to make the crash or the depression more bearable. But that is the push towards adoption. We're not going to like. What is the way that the dollar fails? You can't just say Bitcoin's going to win. You have to say the dollar fails somehow, and the dollar fails because it's a credit-based system. Anyways, okay, let's move on. Disagreement is welcome here. All right, next topic is Liz Ann Saunders. She's the chief investment strategist at Charles Schwab, and she blasts Bitcoin as well. I linked to the clip and the full podcast episode, but this is what she said when she was asked about Bitcoin. Should we just listen to it? Let's see if this will come up. If this will, well, let's see if I'm sharing the audio first. Let me turn the audio up. All right, let's go.
This diversification across the board, would that for you involve crypto?
No.
No. Would it not even involve Bitcoin?
No.
Okay,
But
so
I'm
if I
skeptic. I'm an avowed skeptic.
what's your skepticism based on?
I have yet to get a compelling answer to a question I ask everybody that's either an expert or a believer, which is what problem is this solving for? I get lots of different answers, but none that are terribly compelling. It's not a currency. It's not a store of value. It's not a medium of exchange. It's a speculative investment that's made a lot of people a lot of money. So have at it. But
all right, so there was her comments, and I said that she just states these things as fact. Even though there's contrary evidence, she just states them as fact. It's gaslighting, you know. This is the truth, even though we know for a fact that she's wrong on these things. So a currency is a system of money in general use. So this is the key term, general, here. Bitcoin is owned by up to 22% of U.S. adults. Holding Bitcoin is using. And so its primary utility is appreciation during a monetization phase. So it's not really, I guess, a currency in the general sense, but it is widely used. So if you say switch this general to wide use, then Bitcoin would fit that construction. This is not my definition of currency, though, really. My definition of currency is a derivative of money. So, for example, the U.S. government or a government makes gold its standard. $35 per ounce of gold. Okay. And then it issues currency on top of that money that represents the base money. So it represents the gold. So really a currency is a derivative of money. And that money is general use. But anyway, Bitcoin is getting there. 22% of people, hundreds of millions of people around the world use it. So again, it's not general use, but it's wide use. Okay, number 2, Bitcoin is definitely a store of value. If it weren't, we wouldn't be talking about it. Studies and research show Bitcoin's value as a geopolitical hedge as well. So it's a store of value even in geopolitical tense times. Saunders would have to argue the insane position that Bitcoin hasn't preserved purchasing power in its 15-year history, which is just completely absurd and undefensible. So but she states it as a fact. Okay, number 3, I forgot the B on Bitcoin. How did I do that? Bitcoin is a medium of exchange. While it may not be universal, so there is some controversy around the definition of medium of exchange. It really, to be the larger umbrella term of medium of exchange, it has to be universal. There is confusion here. So medium of exchange is a function and the overarching umbrella of all 3 functions. So to be a medium of exchange, it has to be a store of value, a unit of account, and a medium of exchange. So that overarching umbrella term, I like to use economic medium. If something is an economic medium, then it has those 3 functions, with medium of exchange just being a function within what money is for. So anyway, it's not quite universal, but there are 250,000 transactions a day that settle about $40 billion plus on the network. So that is very significant as a medium of exchange. $40 billion exchanged every day. So that is definitely a medium of exchange. It is definitely a store of value. And it is a form of currency, I would say, but it's not in general use. It's just in wide use. Plus Bitcoin, well, let me restate that. Bitcoin doesn't even want to be a currency. This was a problem with the word cryptocurrency. Satoshi did use it, I think, once in his writing, but I don't know if he came up with the term, because Bitcoin is crypto money. It's not cryptocurrency. So Bitcoin isn't even trying to be currency. And like I said, currency is a derivative of money. But anyway, okay, let's move on to the next thing. This thing kind of got people up in arms today. Saylor promotes holding Bitcoin with custodians and counterparties. This is not something new for him. I'm not going to play this clip. I just want to say something real quick here. So a lot of people are upset about the specific term paranoid crypto anarchists. But it's not really getting me all upset because I never really jumped on the Saylor bandwagon. Yes, I thought he was a pretty good influence on the space, pretty good salesman for Bitcoin in general, being a billionaire with a successful company and having good arguments and good sound bites out there. But I never really followed him all that much. I didn't binge on his interviews, stuff like that. Mostly just saw clips on X about all of his things that he said. He's a smart guy who changed his mind about Bitcoin, so that's very respectable. And he's running a significant speculative attack on the dollar, but he's not perfect. He's also in a very risky public position. So let's just move on. This is not a big deal. I don't know why people are making this such a big deal, what Saylor says. Watch what he does, not what he says. All right? He's running a speculative attack on the dollar. Just concentrate on that. All right, so that's all for the Bitcoin comments. Before we go into macro, let me check if there's any comments from the other platforms. Looks like most of them are coming through Telegram now. Guys, feel free to put your comments in there. Like I said, I'm live streaming after close of business on Eastern time, and usually I'm live streaming about an hour before this. So maybe the normal people that watch are not watching. If you're watching on Twitter, jump over to YouTube and Rumble, make comments over there. That's easier interface. So, all right, let's continue with this. Macro headlines this week. More China stimulus. So China pumps $500 billion into beleaguered property sector, but that's not enough. So just quoting from this article, I've talked about this in depth here on the show. From this article, economists have been expecting an additional stimulus package worth up to 10 trillion yuan or 1.4 trillion. So this $500 billion is about a third of what they were expecting to restore bullishness in the world's second largest economy. Thursday's press conference by the Housing Ministry didn't deliver on these hopes. During the press conference, the Ministry of Housing and Urban Rural Development vowed to nearly double bank lending to designated property projects to 4 trillion yuan by the end of 2024. So they didn't deliver on the 1.4 trillion, but they're promising a bunch more in addition to what they're doing right now. In January, China unveiled a white list of construction projects, which allowed banks to provide them with loans to help them to finish the projects that they've started. Okay, so what I picked out of this is designated property projects right here and whitelist. So this underscores China's centrally controlled economy, making it unlikely that they pull themselves out of this tailspin. They're communists. Xi is hardcore Marxist-Leninist, and if they're doing this, they're not going to be able to bring the economy back to full throttle. Okay, it was full throttle until about, I would say, 2014, 2015, started falling off a little bit, and then COVID really just crushed them. And now you have Xi that is in this really strong position of power over there with his third term, unprecedented third term. And he is cracking down, bringing back Marxism hardcore. So with that, plus their demographic problems, plus the fact that we're deglobalizing and the economic model that China grew up on over the last 50 years is gone. It's changing rapidly. And so they're not going to be able to pull themselves out of this tailspin. The growth rate of China's institutional loans is critical. Credit is a cruel master. When it slows, the burden of repayment quickly forces a financial crisis. Debt forgiveness or bailouts may delay the pain, but they won't revitalize the economy. So here, I just remember seeing this chart this week. Look at that. So credit, like a credit bubble, it's either expanding or it's contracting. It's very hard to hit, exactly like 3% credit expansion every year for 20 years. Okay. If it's going up at these levels, 13%, and then you slow down to 8%, there's not enough new money to pay off the old debts. So it starts collapsing in on itself. And that's exactly what we're seeing right now in China. All right, next topic. Trump has taken commanding lead in the honest polls. This is a snapshot from Polymarket. You can see that's a pretty big lead. I think this is generally correct. Most people don't want to believe this, but I think this is generally correct. Maybe not quite this big, but once you get to like say 55%, these betting odds are going to soar in one direction. So if the polls that are taken, calling or texting people, emailing people to do these polls, and once that starts hitting like 55% or so, start getting to a blowout. Polymarket is just going to go really high, and that's kind of what we're seeing right now. But you can see that this has really just continued to extend all this month on Polymarket. And this will come back up in the price section as well. All right, so let's get into price. Overnight, price hit 69,487, getting close to that $70,000 mark. That's going to start liquidating people before quickly turning around. We are currently at 67,200 at the time of writing. Last week, I said October is historically a positive month for Bitcoin, and there is a significant amount of liquidity pulling the price towards 74,000. I wouldn't be surprised to see a strong breakout this week to the 70 to 74,000 range. So I was a little early on that breakout. I underestimated the fight that the shorts have in them. They are desperate to keep Bitcoin below 70,000 liquidation cascade. Ultimately, that will be a losing battle. The market will snag that liquidity. This was just crazy to me that this stopped right before hitting all this. You usually don't see that. Here, it stopped a little before, not as close as this got to the liquidation levels. But usually you can see like on this down one that we had, it went down and snagged that and stopped right at the bottom of that pocket of liquidity and then bounced. So it's very rare that this stops and turns around. It probably won't last, but just wanted to demonstrate that. This is the very last pattern of resistance if we use the intraday extremes. So I tend not to use the very tips of the wicks. I tend to use like bodies of candles, like closes. But in this case, if you just use the very tops of these two wicks, then this is the last resistance here. Everything else that we've been showing, the megaphone, the channel, and all of that stuff, price is above it now. So it's above all the moving averages. There is a bull cross, or what is it called? A golden cross coming for the 50-200 day. That will happen in the next week or so. Price can go towards those crosses. So if price does fall here, I would say it's kind of moving towards those crosses. And let me just bring that up on the chart. So share this. This is on a daily. And you see the 200 and the 50. The 50 is climbing now back to the 200. So if we kind of extend this out where this will go, it'll be about the 26th or 27th, where this golden cross will occur. And price does tend to be attracted to that. So if we do have a couple days here of negative, be eyeing that. Like if we go back here to the death cross, I was talking about this cross and that price is attracted to it. And so what happened? The candle went right up into the cross like that. I don't think we're going to have a major sell off like that this time, but there could be some pressure because the cross actually is a Schelling point. So even though we're above all of the moving averages, that this cross alone can affect that. But we are quite bullish overall. So I don't expect a big impact. Okay, moving back to the report here. That's what I was talking about there. Other than that, not much to say about price this week. Everything is continuing from last week into this week. We are waiting for the breakout that will happen soon. I remain very confident this week that we are close to that breakout. However, markets are about to start holding their breath for the election, which could delay things further. I did go back and look in the premium or at the Friday's premium post. And in there, in the medium term forecast, I looked at the effect of elections on the Bitcoin price, and there really isn't any. So, yes, I think traditional markets will be holding the breath, but Bitcoin probably won't be all that affected by the election. I don't think it is a coincidence that all the fundamentals, including the new options approval, were lined up for Bitcoin right as some central bankers decided to publish their anti-Bitcoin articles. That effect combined with shorts trying to protect their positions, and that's has only temporarily delayed the inevitable. So yeah, there's a little bit of timing suspicion here. Bitcoin approaching its all-time high, and that's when the central bankers dumped their articles. So anyway, ETF inflows rocketed past 21 billion last week. You can see this increase right here. Just a spectacular amount of Bitcoins going into the ETFs right now. Bitcoin is up 6% in October so far, and getting back to the all-time high is only 9% more from here. Things can happen fast. There is the uncertainty around the election, which could delay a true breakout in Bitcoin, but I think that is overblown. Oh, this is where I talked about that. Okay. And the last two presidential elections did not affect price, and those were not any less intense than today. I'll tell you that. All right. Overall, we are close to the liquidation level. I don't expect a significant sell-off before an all-time high. After an all-time high, that's a different story. Macro markets are generally bullish and predicting a Trump win. An all-time high for Bitcoin prior to the election seems likely. So there you go. That is the price for this week. Dex Invictus back with us. Happy you could join. Put your questions, comments, concerns in the chat. 166 people watching. I am live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching on Twitter, jump over to YouTube or Rumble. Put your comments there. Subscribe over there, please. I'm trying to get to 500 subscribers. Let's see where we're at right now, actually. Where are we at right now? $4.99. Come on, people. $4.99. Let's get to 500. Let's get to 500 subscribers over there on YouTube. All right, let's go back into the report. Oh, let me check Telegram, see if there's any more comments. 778 here says, I think that the 6-month liquidation levels map is broken. Look at the short-term leverage once you zoom out. Places where you should only have a week of leverage show far less leverage on a week time frame than when you look at it from a 6-month time frame. Okay. Okay, so let me just go into that. I think I can explain that, but let's see. So you're saying that when we are like down here at the week, like these levels you're talking about are brighter on the week than if you go to the 6-month. Like it's showing different levels, amounts, but what's signified by these colors changes. So this one goes all the way up to 11.58 billion. So that's saying that's the highest on this chart. The most yellow is 11.58 billion. and that's right at 70,000 basically. But when we go down here to the 1 week, there's just less accumulated positions within this 1 week. So if I opened a position 2 weeks ago, it wouldn't show up on the 1 week. Okay, I hope that answers the question. See, this one only goes up to 252 million. But I hope that answers the question. 778. All right, let's go back to the report. Where was I? Going into the headlines in the mining sector. So hash rate hits an all-time high. Despite the price still not being at an all-time high, hash rate has responded to the recent Bitcoin price rise by hitting its own all-time high. Hash rate can be a leading indicator. For example, bullishness by miners and investors could lead to higher demand for hash rate and the mining equipment suppliers selling more miners. But short-term movements like we've seen in the last week are likely a response to the recent price rise. So I saw a tweet, I think it was Max Kaiser, but he said hash rate's a leading indicator of where price is going. In this case, though, it's not, because it's a short-term price movement. However, if you look at something like the 200-day moving average or even the 1-year moving average, that, yes, if that starts to rise, that is a leading indicator of where price is going. But that's because it takes a long time to create more hash rate. You got to build the miners, you got to sell the miners, ship them across the world, build the warehouses and the data centers and stuff, put that in, get them all turned on. That takes a long time. But a general long-term rise in hash rate would be a leading indicator of just bullishness for Bitcoin. But these short-term spikes like this, I mean, that really has nothing to do with it. That's all a response to price. That's a lagging indicator there. Now, if we had this price action going higher, but hash rate going down, instead of spiking upward, maybe it continued to trail down here for a couple weeks. In my opinion, that would be a bearish sign. So in that case, I guess it's not confirming the price rise. So yes, that would be actually be a leading indicator if that took place. But in this case right now, this spike in hash rate is due to the price, not to any sort of leading indicator. All right, next story here is from Crypto Globe. Do you hodl or diversify as a miner? So hodl or diversify into AI. This is a question that's kind of come up recently. I've covered this idea several times on the show here. A lot of miners are, spending their Bitcoins and diversifying into GPUs and AI. A lot of miners initially did this because they might have had GPUs for mining Ethereum. And then when Ethereum went proof of stake, we had all these GPUs that needed to go somewhere. And so maybe some of those miners started hosting for AI. But this is a completely different type of strategy here. And on one side, we have Marathon and Riot and CleanSpark. They're adding to their HODL stack like crazy. I think Marathon's over 20,000 Bitcoins now. Other miners, though, like Core Scientific and TeraWolf, they are diversifying into AI. Now, I think that's probably in the long term, that's not a good idea. But in the short term, it's been very good. Core Scientific is up 272%. There's some extenuating circumstances here for Core Scientific. They were bankrupt and then they got back on their feet and started up again, and that's one reason why their share price has jumped this much. I would put TeraWolf in more of what we would expect right now is 128% so far this year, and they've been diversifying into AI pretty heavily. But we've also seen Bitcoin being generally flat all year, and we have the halving as well. So just right now, comparing Marathon and Riot and CleanSpark to these players, in the very short term, the AI people are winning out. But if you go into the long term, if you're hodling Bitcoin, you're probably going to benefit because it's going to be going up by 10x, and that's going to attract a lot more people buying their stock and stuff like that. So if Bitcoin goes up by 10x, some of these companies could go up by 20x, and that's a far away from 128%. Plus, I think the AI boom is kind of played out, at least for the time being. And I really, I'm not a AI promoter at all. I'm actually kind of a skeptic about AI. So I don't think this is a good long-term plan. It has been good this year, maybe next year, but it's not a good long-term plan and definitely won't outperform Bitcoin HODL stack. Okay, so that was the news for mining. Hash rate and difficulty. Hash rate spiked to all-time high. Next difficulty adjustment was 20 hours from the time of writing. And it's supposed to jump another 4.3%. Let's take a look at this. Look at that big old, well, you can't really see it too well. It's the light orange line up here where this hash rate just spiked to an all-time high. The moving average has curled up and difficulty will jump, and it will be an all-time high difficulty coming up today, later today. This is a refutation of the anti-Bitcoin skeptics above in the headline section. Miners are casting a solid vote of confidence here. All right. Mempool. There was a little bit of excitement over the last 2 weeks in the mempool, but has been quiet for the last few days. Miners have chewed through all of the above 2 sats per virtual byte fees. There is little congestion on the network right now. So you can see there was this little bit of excitement right here, but it has since gone down. Chewed all the way through, in even chewing through some of these low fees transactions right here. Just a little spike here at the end, but I mean, this is pretty dead. What else is interesting about this? You can see the colors and how the colors kind of fan out. We haven't seen that in a long time. Look at that. It's just solid blocks of fees levels. But this, we had the fan, and then it chewed through, and now whatever. There we go. So that's what's happening there on the mempool. Let's get into layer 2. This will be the last thing. I'll take a look at comments here after that. So Blockstream secures $210 million debt funding for Bitcoin layer 2 strategy. This is from Cointelegraph. I'm partial to sidechains. I think that sidechains right now, at least, are the most obvious way to scale Bitcoin. There could be something in the future. Maybe Lightning gets more adoption. It gets some of the limitations that it has ironed out, gets better UI and all that stuff. So Lightning could grow. Maybe there's another solution that is kind of way more niche that could be adopted, way less known or even unknown today, hasn't been invented yet, that could take Bitcoin, serve Bitcoin for mainstream adoption. But sidechains, I think, are a good compromise. There are trade-offs, of course, with federated sidechains. They are not decentralized. They're federated. So there's 15 to, 20, 30 that you could have of these validators, and they take turns validating the transactions in a block. And you can have different rules on the sidechain. You wouldn't have to use Liquid. You could roll your own sidechain, and each country could have its own sidechain. And so each country could have different rules, which I think is very interesting. Some countries might allow for very high secrecy, like the Swiss sidechain is probably going to have like confidential transactions, but maybe the UK sidechain will not, or definitely the Chinese sidechain will not have confidential transactions. So there can be different rules for different countries, and they can still kind of control their jurisdiction. But at the same time, using Bitcoin because everything's pegged to Bitcoin, right? Exchange rates will be. We even use the word peg for currency. If you peg your currency to another currency, it doesn't float against it. And sidechains use the term peg as well. So you can peg your exchange rate with your sidechain peg, which is kind of an interesting thing. And you can also switch them, have them be swappable, so you can swap out of one and swap into another. You could have markets where people could trade these, US BTC versus Japanese BTC, whatever, on the open market. And yeah, you could replicate what you need to replicate for this international type of system with sidechains. Just a whole bunch of sidechains, 200 different sidechains. And some countries might not want their own sidechain. Like think about El Salvador, right? They use the dollar and Bitcoin. Some countries might not have their own sidechain. Probably quite a few. If they're not, they'll just default to using the US sidechain, most likely, or maybe their nearest large trading partner or something like that. So that's how right now, I think that's the most plausible way for Bitcoin to get mass adoption and mass usage outside of on-chain is through sidechains. But anyway, so getting back to Blockstream here, blockchain technology firm Blockstream has expanded its capital raising efforts, securing $210 million of financing through a convertible notes round led by Folger. Okay. According to an October 15th announcement, the debt will support Blockstream's ongoing infrastructure projects, including its Layer 2 strategy, mining operations, and financial products development. Among Blockstream's flagship products is the Liquid Network, a Bitcoin sidechain launched in 2018 to provide faster transactions and asset issuance, such as stablecoins and security tokens. So there you go. They're getting some funding, which is good. All right, let me check the comments, guys. Oh, wait, one last thing. In case you missed it, here's all the content that I put out last week, so you can check that out. Okay, back up to the top. Let me check comments. Been a long live stream here today. Dex. Yeah, if you don't sub, guys, you're whack. I probably got that one sub. Let's see where we are right now. Refreshing the page to see if we got to 500 subscribers. Woohoo. Next goal is 1,000. Come on, guys. So 176 people watching, probably most on Twitter. Jump over to the YouTube and Rumble. Subscribe over there. Appreciate that. Help me grow and reach more people with that. John Delaney, what's up? All right, let me check Telegram. And just check the random. All right. So that's going to do it, guys. Actually, let's take a look at the live prices. There has been some action that I did not go over in the newsletter. So you guys are going to get an extra little bit here on the macro stuff. One thing I was looking at and we were talking about in the Telegram was this. Okay, this is the US 10-year. And it actually absolutely rocketed higher today. Rocketed higher. And a lot of people, I saw Stan Druckenmiller was out there and he's saying, oh, he's short bonds with 20% of his portfolio, which is an insane amount to be short bonds going into recession. I mean, what is he thinking? He's obviously super brilliant guy. So I'm not like second guessing him on this, but I guess I am. If we're going into recession, yields fall. Okay. Yields rise with optimism. Are things very optimistic right now? I mean, maybe if Trump wins, people are optimistic. Soft landing seems to be much more of a thing out there right now. But overall, this is what I'm seeing. Okay. It did break the 200-day moving average, which is pretty important, but we'll see if it can hold up there. Yields rise on optimism, but it's only temporary. So these are all the things, the four big things that have happened that have really affected this, I think. Fed cuts. So most people, they give the Fed the benefit of the doubt. Maybe the cut will stimulate the economy. Right? A lot of people are saying the Fed cut too much. What does that mean? That means it's so powerful. So we had to give the Fed the benefit of the doubt. That's what put in the bottom. All right. And started going up. Then China bazooka happened. That kept it elevated where it didn't turn back over. That just added to the overall bullishness. Oh my gosh, China did all of this stimulus. It's going to overheat the economy. That's the type of optimism I'm talking about. And then we had a big US payroll beat, which will probably be revised lower, but that happened right here on this day, the 4th of October. That really shot. Everyone's like, oh, look, the Fed cuts, China bazooka, US payrolls beat. This is a booming economy. We're overheating already. The Fed's going to have to raise rates. People are still talking about that. The Fed is going to have to raise rates, guys. Then it started petering out and turning over, and it was with oversold conditions, started coming down. Now, even if we did close today up here, but if this starts tipping over a little bit, we're going to have a bearish divergence here. But anyway, then Trump takes that huge lead on poly market that I was showing you in the newsletter. More optimism. People are really, they think, they look at Trump and they see tax cuts. They think of the economy under his first 4 years, and they start getting more optimistic about the future. Things are kind of seem like we're going to have a soft landing, and Trump's coming back. And look at all this stimulus. Woohoo. It's optimism. That's what's driving this yield higher. It's still way below anything up here. I mean, we were all the way up at 5% last year at this time. And now we're down at 4.19, and everyone thinks that it's like amazing that they're going to have to raise rates. No, that's not going to happen. The most that Powell will do is keep rates stable, but I don't think that's going to happen either. I think he's going to cut rates 2 days after the election, but we will see as we get closer. Things might change. Dollar, big day on the dollar, also breaking through the 200-day moving average. Kind of surprised that this is still going. It's quite oversold, but we could get a bearish divergence here at the top. I expect the dollar to rise. I just didn't expect it to rise this quickly, and so probably need a cool off here sooner rather than later on the dollar. Gold ended the day flat. Let's see, actually negative a little bit, negative $1. So really started the day looking really good, but then came back. Interesting, gold has been rising as the dollar has been rising, and that is quite a rare circumstance, but what we would expect in a pre-recession period. All right. That was gold. Somebody put in a comment on YouTube and wanted me to look at silver. So I will do that. And it has really soared to new all-time highs, or not new to all-time highs, but new highs. And I can't wait till silver hits 50. I'm probably going to sell some. I still own physical gold and silver. I don't know why. I should have traded it in for Bitcoin a long time ago, but I'm one of those people that holds on to everything. But if it does hit 50, I'm probably going to sell, because I think it's going to be it's not going much higher. Like a lot of silver bugs have been waiting for silver to spike, waiting for these like naked shorts to get flushed out, to the suppression, the market manipulation to be overtaken, and the top of silver just blows out. But that's under the assumption that silver is still a monetary metal, and it is not. Gold is a monetary metal still, but silver is not. It's way too used in industry, so its stock to flow is higher. We have an alternative with, like silver was not as good as gold, but it served us as an alternative, as a different purpose. Well, now we have that with Bitcoin, so we can have Bitcoin and gold instead of gold and silver. So it's not a monetary metal, and it's not going to explode to over $100 an ounce. I mean, maybe it touches 100, but this is not going up like Bitcoin. This is just a temporary spike, and it's not quite oversold yet, so it might have a little bit left in it in the tank here. So we'll see where that ends up. But it looks nice. Happy for the silver people. Okay, back to Bitcoin and other things. Oil. Looked like oil was going to break back above this resistance line today. Oh, it did. It did close above it. Gapped higher a little bit intraday here, but anyway, still really low. Oil is going lower. I listened to a Doomberg podcast the other day, and he was talking about how, he's very bearish overall on the oil market. For more technical reasons than I am. I'm just bearish on it for economic reasons that the global economy is breaking down. And as the economy slows, there's going to be less demand for oil. However, there's just more oil available. And so supply is going to rise when demand is marginally decreasing. And so price cannot maintain certain levels. It should go down to 50 over the next year. That is my guess on that. Okay, S&P 500 down a little bit on the day, but nothing significant to report there. Okay, so those are our macro charts. Back to Bitcoin. 67,700 right now. Last chance. I'm going to check comments one more time and see. 500. Yep, just hit 500 subs. Appreciate you guys. If you're watching on Twitter, jump over to the YouTube and Rumble. Like, comment, subscribe over there. Appreciate that. Helps spread the channel. He's probably been betting on the 10-year, 3-month uninverting. Who is that in regards to Stan Druckenmiller? I don't know, but 20% of his portfolio, that's a huge, huge sum. I mean, he wouldn't say it today if he's like right now investing. He probably invested back here when the Fed cut. He probably went short when the Fed cut, I'm guessing. And now he's talking about it. So he's probably selling. He's probably selling right now, if that's who you're talking about. All right, let me check Telegram real quick. All right. Well, that's going to do it for me, guys. Hope you had a good start to your week. Join me on Wednesday and Friday as well for these live streams. And subscribe over there to the email list on bitcoinandmarkets.com. That's where I do all of my writing here. I also write for Forbes, but haven't written a piece here in a couple weeks. I need to put something out for Forbes as well. But thanks for hanging out, and I will see you guys on the next one. Bye.